Joins me for more on this. Peter, great to have you back on the show. What is the general reaction to Musk on Twitter? He's been on the platform very vocally, has been criticizing the platform on Twitter very vocally. Is he expected to make big changes?
Well, I don't know. I can't speak for that, but I can tell you this, that the market seems to applaud that. Obviously, we were up, the price of the stock was up sharply yesterday, and it's up today in lieu of the fact that the market is somewhat on the soft side. He took a 9.2% stake, and usually that's considered passive. What he does or what are his future plans or what he intends to do is yet to be seen. And of course, the market will judge that as the days go by.
Excitement, Peter, because obviously Musk's expertise doesn't lie in running a social media organization or contributing to it in any significant way, though he has talked about making significant improvements. What really is the sentiment that the market is cheering?
Well, as I said before, the market seems to like it. The stock was up, about 9 or 10 points yesterday, and up 2 points today after his recent tweet. So obviously, investors are enthused about it. Look, anytime you have corporate raiders or investors or companies taking a stake in a company, the market always thinks that perhaps there'll be changes down the road. So I think that's what the market is telling us right now.
Well, if I look at the broader markets and how Wall Street has opened this morning, it doesn't seem too positive. The Nasdaq is down 1.5%, actually. S&P 500, Dow Jones also in the red. What are the primary concerns here, Peter, that we're looking at in this morning's trade?
I think the market is lower because Bernard came out with some pretty hawkish comments this morning, saying that the Fed is going to continue to raise interest rates, and also said that the Fed will begin scaling down their balance sheet in a rapid way, and as a result of that, we see that yields are going through the roof. 10-year is at 253 as we speak, even though there's been inversion in the yield curve. So all of this is weighing on market sentiment this morning. And the key here is, of course, the transportation averages that are down close to 2%. Last week at one time, they were down over 8%. That's usually a sign of negativity in terms of economic activity. And with the yield curve being inverted, obviously, the market is expecting a very intense slowdown, meaning possibly recession. In fact, I think that's probably what's going to happen in the first quarter of 2023. We're probably headed for a mild recession. You can't continue to grow with interest rates moving higher at the speed that we were growing at. So you have to expect a slowdown of economic activity. And of course, the war factor brings us closer to a hard landing as opposed to a soft landing, because we're seeing commodity prices remain elevated, with oil trading over $100. Agricultural prices continue to move high. In fact, there's a possibility of a food crisis on a global scale, which means that agricultural prices are going to go even higher. And that just simply means more inflation and a very, very tough fight for the central banks around the world.
Absolutely. Thank you so much, Peter Cardillo, for joining us as always and giving us a sense of what's happening on Wall Street.